Good morning to everyone, and thank you all for having me back for our third workshop in the IRS Business Series. For those of you who did not participate in the prior two workshops, or you haven't had a chance to watch the recorded video, again, my name is Anika Pompey, and I am a Senior Stakeholder Liaison with the Internal Revenue Service. So in my role as a Senior Stakeholder Liaison, I am responsible for establishing relationships with groups such as tax practitioners, business and industry organizations, nonprofit and social organizations, and of course, educational institutions to help spread awareness of IRS messaging, keep my partners up to date on IRS news, and of course, share any new resources and material as they become available. And then also in my role, I do these types of workshops and presentations as well. So again, today we are doing a workshop on IRS business credits. So I will go ahead and launch my PowerPoint presentation. If you're a business owner, there are a host of business credits that are available to business owners, whether you're a small business owner, a mid-sized business, or a large business. And we're only together for an hour today. So I thought I would just touch on a few of those credits. And then later on, I can show you a resource where you can find more information about additional credits that are available. All right, so today what we'll discuss is the Work Opportunity Tax Credit, the Small Business Healthcare Tax Credit, and then we will finish off with the Qualified Business Income Deduction. All right, so first up is the Work Opportunity Tax Credit. Okay, so I kind of jumped the gun. Before I get into the presentation, does any of, do we have any small business owners here? You can just raise your hand, hit the raise hand feature if you have a small business. Okay, I see a few raised hands. Awesome. Now, do any of you employ anyone? Do you guys hire employees? If so, raise your hand or keep your hand raised. Okay, all right, awesome. So as a business owner with employees, this is a credit that could be a good option for you if you haven't already exercised the use of the credit. So the Work Opportunity Tax Credit is a general business credit that is provided under Section 51 of the Internal Revenue Code that is jointly administered by the Internal Revenue Service and the Department of Labor. So the Work Opportunity Credit is available for wages paid to certain individuals who begin work on or before December 31st of 2025. And the credit may be claimed by an employer that hires and pays wages to certain individuals who are certified as being members of one of 10 targeted groups. All right, so we're just going to go over what those 10 targeted groups are. An employer can claim the Work Opportunity Tax Credit for an individual who is certified as a member of any of the following groups under Section 51 of the Code, and they are formerly incarcerated or those previously convicted of a felony, recipients of state assistance under Part A of Title IV of the Social Security Act, veterans, residents in areas designated as empowerment zones or rural renewal counties, individuals referred to an employer following completion of a rehabilitation plan or program, individuals whose families are recipients of supplemental nutritional assistance under the Food and Nutrition Act of 2008, recipients of supplemental security income benefits under Title 16 of the Social Security Act, individuals whose families are recipients of state assistance under Part A of Title 4 of the Social Security Act, individuals experiencing long-term unemployment, and then finally, summer youth employees. So employers of all sizes are eligible to claim the work opportunity tax credit. And this includes both taxable and certain tax-exempt employers located in the United States and in certain US territories. So while employers claim the work opportunity tax credit against income taxes, eligible tax-exempt employers can claim the work opportunity credit only against payroll taxes and only for wages paid to members of the qualified veteran targeted group. Now, just briefly, we'll go over how much the credit is. So in general, the work opportunity credit is equal to 40% of up to $6,000 of wages paid to an individual who is in their first year of employment, who is certified as being a member of a targeted group, and who performs at least 400 hours of service for that employer. So the maximum tax credit is generally $2,400. Now, a 25% rate applies to wages for individuals who perform fewer than 400, but at least 120 hours of service for the employer. And also up to $24,000 in wages may be taken into account in determining the work opportunity credit for certain qualified veterans. But an employer cannot claim the work opportunity credit for employees who are rehired. So the credit is limited to the amount of the business income tax liability or the Social Security tax owed. A taxable business may apply the credit against its business income tax liability, and the normal carryback and carry forward rules apply. So, and what I mean by carry back and carry forward, when you all do your taxes, you're pretty much determining what your tax liability is. And this credit is available to reduce your tax liability. So in the instance that the credit exceeds your tax liability, you're able to either carry the portion of the unused credit back to a prior year tax return. You have to amend your return, or you can carry it forward to the following year's tax return. So just to give you a little example, if you have a credit that's $2,400 and but your tax liability is only, you determine your tax liability after your deductions is only $1,000, that excess credit of $1,400 can either be claimed on the prior year return. Again, you would file an amended return, or you would just wait until you file your subsequent year tax return and claim that carry forward, that excess carry forward credit on that return. Now, for qualified tax exempt organizations, the credit is limited to the amount of employer Social Security tax owed on wages paid to all employees for the period that the credit is claimed. All right, so all employers have to obtain certification that an individual is a member of the targeted group before they're able to claim the credit. So you would obtain your certification by filing Form 8850, which is titled the Pre-Screening Notice and Certification Request for the Work Opportunity Credit. An eligible employer must file Form 8850 with their respective state workforce within 28 days after the eligible worker begins work. So employers should contact their individual state workforce with any specific questions that they have about Form 8850. Now, once your new employees have been certified as being members of the targeted group, when you file your tax return, if you are a for-profit business, you're going to use Form 58 5884 work opportunity tax credit with your tax return. And then if you're a tax exempt organization with employees, you're going to file form 5884-C, which is work opportunity credit for qualified tax exempt organizations hiring qualified veterans in order for you to claim the work opportunity credit. So that is all I have at the moment for the work opportunity credit. Does anyone have any questions about that credit so far?
Hi, good morning. This is Monique.
Hi, Monique.
This is if we want to consider hiring individuals on the list that you just provided, correct? Then we need to fill out this form to get this
right. So you would, if you're hiring an individual from the list of targeted groups that I went over earlier, then this credit would be for those individuals. Caitlin, did you have a question? You can unmute yourself.
Yes, I know that you stated that the employer has to file with workforce, correct? They have to file that form with workforce once the person is hired?
Right.
Okay, so if business taxes, say for 2020, have not been filed yet, and that employee was hired in 2020, can you go back to file that form for 2020, or you can't do it and you just have to go forward for 2021?
So you hired the employee in 2020, but you
Yes.
didn't complete the certification within the 28 days of hiring them?
Correct.
Okay, so there may be a little bit of leniency with when you file the form, but I couldn't give you any specifics. You would have to ask your state workforce agency.
Oh, okay. Okay. Thank you.
You're welcome.
Anika, can you tell us the name again of that 8850? Is that the work opportunity tax credit? What is that form name again?
So the certification form is the pre-screening notice and certification requests for the work opportunity credit. It's a very long title. I believe I included a hyperlink at the end of this presentation. And if I didn't, I'll make sure I add the hyperlink before I forward the presentation to Ms. Giddens. Okay, so the next credit is the small business healthcare credit. Okay, so this credit is, the small business healthcare credit is available to small employers who pay health insurance premiums on behalf of their employees who are enrolled in a qualified health plan. For my business owners who do have employees, do you guys provide a healthcare option? Or if so, you can raise your hand. I'm not seeing any raised hands, but the credit was basically, it was created under the Affordable Care Act, and it was basically created to kind of encourage small business owners who usually aren't even required to offer health insurance to, they wanted to encourage them to offer health insurance plans to their employers. So the credit was kind of an, of course it was an incentive if you offered health insurance to your employees.
You do have a question that just came through the chat. Let's see. I do not provide healthcare at this point, but would that include the healthcare paid for by the owner operator? Did you hear me, Anika?
Yes, I see the question. So yeah, we're about to go into those details.
Okay.
Those details now. So yes. So a small employer is eligible for the credit if it has fewer than 25 full-time employees. The average annual wages of the employees are less than $56,000. and it pays a uniform percentage for all employees that is equal to at least 50% of the premium cost for the employee's insurance coverage. So if you have fewer than 25 employees, wages are less than 56,000, and you pay at least 50% of the premiums, you could be eligible to claim this credit. And the figures that I just gave you, well, as far as the wages, is based on 2021 because it's adjusted annually due to inflation. Now, tax-exempt organizations that meet the definition of an eligible small employer may also qualify for the credit. The credit is refundable for tax-exempt employers, but it is limited to the amount of the employer's payroll taxes withheld during the calendar year in which the taxable years begin. And then you also have to offer a qualified health plan to your employees through the Small Business Health Options Program Marketplace. And for short, they call it the SHOP Marketplace. And at the end of the presentation, you'll see that there's a link for the SHOP Marketplace so you can learn a little bit more about that. Now, I just want to go back to the requirements I listed. So the first thing I said was you had to have fewer than 25 full-time employees. Now, if you have part-time employees, 2 part-time employees counts as 1 full-time employee. So if you have more than 25 employees, but a good number of them are part-time, then you can still meet the eligibility for this credit. Because again, 2 part-time employees is equal to 1 full-time employee. So if you have 50 part-time employees, then you would still meet the eligibility for this credit. Okay, so how much is the credit? So the credit is 50% of premiums paid for small business employers, or 35% of premiums paid for small tax-exempt employers. The credit is available to eligible employers for 2 consecutive taxable years. The amount of the credit you receive works on a sliding scale. So the smaller the employer, the bigger the credit. So if you have more than 10 full-time equivalent employees, or if the average wage is more than $25,000, the amount of the credit you'll receive is going to be less. Now, even if your small business doesn't owe taxes during the year, you can carry the credit back and forward to other years, similar to the work opportunity credit that we just discussed. So, and also, since the amount of the health insurance premium payments is more than the total credit, eligible small businesses can still claim a business expense deduction for the premiums in excess of the credit. So as small business owners, you all are, hopefully you're all aware that, you can take a deduction for any insurance premiums that are paid on behalf of your employers. So in addition to the deduction for insurance premiums you can claim, you can also take this credit as well. So in essence, you'll get both a credit and a deduction for any employee premiums that you pay. All right, so how do you claim this credit? To claim this credit, you have to file Form 8941, which is the credit for small employer health insurance premiums. This form is used to calculate the credit. And for filling out, for more detail about the form, you can refer to the instructions. But if you're a small business, you include the amount as part of the general business credit on your tax return. And if you are a tax-exempt organization, you include the amount on line 44F of Form 99T, which is titled Exempt Organization Business Income Tax Return. And you have to file the 99T even if you don't ordinarily file this form. So that concludes the section about the small business healthcare tax credit. Do I have any questions about that credit, you can raise your hand or you can include a question in the chat.
Hi, this is Monique again.
Hey, Monique.
So as a healthcare provider, and being small, I'm still startup phase, what I offer is free care. So can I still, if I offer to provide care for someone, so instead of them paying me to provide their health care, it's really, I just write it off. Can I use those dollars that I don't get from them as a way to get this credit?
So, okay. So the credit is for if you pay premiums on behalf of your employees, like if you pay up to 50% of the insurance premiums on behalf of your employees. So are the people that you're providing care for, are you providing care in lieu of wages?
Yes. Yes. I'm considering that. I was wanting to see if that was an option, if this was an opportunity for me to be able to do that.
Okay. You know what, I don't have a question for that answer at this moment. I'm gonna have to do a little bit of research.
Okay.
But I definitely wrote that down. And then at the end, just as a reminder, you can also email it to me because you can provide a little bit more detail in the email.
Okay.
And I can definitely get back to you with a response to that question.
Okay. Thank you.
Do I have any other questions? Okay, I don't see any hands and I don't see any new chat entries. So we'll go ahead and move on to qualified business income deduction. Okay, so the qualified business income deduction is also known as a pass-through deduction or the Section 199A deduction. Deduction became available to taxpayers beginning in 2017 after the passing of, I forget the name of the bill, but it was the tax reform bill that was passed under President Trump. And so far, it's helped a lot of small business owners. So let's get into some detail about that. And some of you already may be aware of this credit. Your tax professional, or if you're doing your taxes yourself, you might notice that the tax software program automatically computes this credit for you. But we'll go into a little bit of detail and I'll explain to you exactly what the credit is. So individuals and certain trusts and estates may be entitled to a qualified business income deduction of up to 20% of their qualified net business income for qualified trades or businesses that are conducted directly or through pass-through entities, plus 20% of their Section 199A real estate investment trust, dividends, and any qualified publicly traded partnership income. So certain income from cooperatives is also eligible for the deduction. The qualified business income deduction can be taken in addition to your standard or itemized deductions. And what is on this slide is pretty much the basic definition. So for all taxpayers, the deduction is limited to the lesser of these amounts or the taxable income less any net capital gain. So depending on the taxpayer's taxable income, the deduction may be subject to other limitations, depending on what type of trade or business that they're in, the amount of any W-2 wages that were paid with respect to the trade or business, and then any unadjusted basis immediately after acquiring any qualified property that's held in your business. All right, so let's talk about who is eligible for this deduction. Taxpayers other than your C corporations, including individuals and certain trusts and estates who have qualified business income from a trade or business, can claim the credit on their tax return. Partnerships and S corporations, they don't determine the deduction at the entity level, but what they do is they pass through the information necessary for their partners and shareholders to claim the deduction. Okay, Carla, I see your chat. The name of the deduction is the Qualified Business Income Deduction. All right, so let's talk about what qualified business income is. And so qualified business income, from here on out, I'm just going to refer to it as QBI. So basically, QBI is the net amount of qualified items of income, gain, deduction, and loss from any trade or business. Only items that are included in taxable income are counted. So for example, if you have current year business losses that are limited by passive activity loss limitation, only the losses from the businesses that are allowed to be claimed on the current year's tax return can be included in the QBI computation. So in addition to that, the items have to be effectively connected with a US trade or business. So businesses that may generate QBI include those that conduct through sole proprietorships, S corporations, partnerships, trusts, and estates. Again, income earned through a C corporation is not eligible for the deduction. All right, so QBI is reduced by any deductions attributable to trade or business that include but are not limited to the deductible portions of your self-employment tax, your self-employed health insurance, and then of course any contributions to qualified retirement plans. So what that means is QBI is also reduced by interest expenses generated from borrowing funds. If you borrow funds to purchase an interest in a partnership or an S corporation. Okay, so let's talk about what a qualified trade or business is, because not every trade or business, there's some exclusions. So what I'm gonna do is I'll define what a qualified trade or business is, and then we'll go over what some of the exclusions are. All right, so basically a qualified trade or business is any business, a US-based business under that qualifies as a business under Section 172 of the Internal Revenue Code, and is therefore allowed a deduction for ordinary and necessary business expenses. Depending on the taxable income of the taxpayer, certain specified service, trades, or business are not eligible for the deduction. So the businesses that are not that aren't eligible are going to include those that are in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, or any trade or business where the principal asset of the business is the reputation or the skill of the person, or the person who owns the business or its employees. Now, a specified service, trade, or business includes any trade or business that involves the performance of services that consist of investing and investment management, trading or dealing in securities, partnership interests, or commodities. And there is an exception that applies. So if a taxpayer's taxable income before the qualified business income deduction exceeds the threshold. So for 2021, the threshold amount is $329,800 for married couples, and then $164,900 for for all other taxpayers. And then again, these amounts are adjusted annually for inflation. So I know I just went over a lot of information there. So if we want to just pause here for a second, if you need me to clarify anything, or if you have a question about something, I'd be happy to help you with that.
That was a lot of information. I feel like you need to repeat it. Because the first thing I thought was, what businesses are really included? That was a little bit.
You know, when you go through that list of fields that are excluded, it does feel like it doesn't include anybody. But
yeah, that's exactly what I was thinking.
But the instructions for this particular credit, it goes into a little bit more detail. So but it does sound like a lot of this is not included. And I know because the health and law and accounting, they're really big fields already.
Yeah, and why is that?
You know, this was, I really couldn't answer that question for you at this moment. I would have to go back and refer to when this was actually passed and to see why these particular fields were excluded.
Okay.
Yeah,
and would that include other financial fields like financial advisors? If they're doing accounting, or that's just specifically CPAs or bookkeepers?
So I would say, you know, I'm on the fence about that one. I would have to look it up to see if there is an actual, like a list, if they provide an actual list or to break down, you know, which occupations or which business types are not included. Because the way I read it is, it says if your trade or business is pretty much based on your skill, the principal asset of the business is your skill, is how it reads.
Okay, if there's a list in for
Yeah, I'm gonna look
guys
into that.
register for the next class, we'll probably have that information by then, and we can include it as a link or something.
Okay. Yeah, I'm gonna have to do some research because it may be some additional information in the Treasury regulation. But again, I will have to look that up. Okay. All right, so in general, to be engaged in a trade or business, the taxpayer must be actively involved in the activity with continuity and regularity, and the primary purpose for engaging in the activity must be for income or profit. So if it's a standard that is higher than investing, and it clearly excludes a mere hobby. For interest-owned In pass-through entities, the trade or business is determined at the entity level. So if a pass-through entity is found to be engaged in a trade or business, an owner can claim the deduction even if the owner is passive or doesn't materially participate in the trade or business. Okay, so let's talk about the pass-through entities. The actual pass-through entity itself is not able to claim the deduction, but the income they generate, of course, may be qualified business income. So this includes income that's earned for a pass-through entity from in 2021. So as a result, S corporations and partnerships must provide the necessary information to their shareholders or their partners on the K-1 so that they can figure or compute the credit. I'm sorry, it's not a credit. So they can compute the deduction on their individual income tax returns. Now, estates and trusts, on the other hand, they may either claim the credit or they can pass the information through to their beneficiaries so that the beneficiaries can figure what the deduction is. And so estates or trusts, they have to split the qualified business income items between the estate or trust and its eligible beneficiaries, and then report the necessary pass-through information to beneficiaries on the Schedule K-1. Pass-through entities, they do have to report its eligible shareholders, partners, or beneficiaries all the necessary information for them to compute the qualified business income deduction. So this includes reporting each owner's share of the qualified business income items, including any separately stated items that are attributable to the trade or business. So whether any trade or business conducted by the entity is a specified trade or business or W-2 wages or qualified property or qualified real estate instrument trust dividends, and any domestic production activity deduction passed through has to be forwarded. The information has to be forwarded to its owners so they can make the determination about the deduction. Okay, so how is the deduction computed? So Section 199A provides for a deduction of up to 20% of the cumulative qualified business income, which is referred to as the QBI component, plus 25% of any real estate instrument trust dividends and any partnership income. The deduction is, however, limited to 20% of the taxable income that is calculated before the deduction, less any net capital gain. So just remember, the qualified business income deduction can be taken in addition to the standard or itemized deductions. So this slide here is just like a fundamental calculation of the qualified business income deduction. There are some intricacies to this law that, you know, depending on the type of income you receive, it may kind of complicate the computation. So for any specifics about calculating the component, you may want to definitely consult with your tax professional. And because different components of the deduction can differ significantly depending on the type of business you have. Okay, So how to claim the credit. So for tax years 2019 and later, you would use Form 8995, which is the Qualified Business Income Deduction, Simplified Computation, or you would use Form 8995-A, Qualified Business Income Deduction.
Hey,
Uh,
yeah, yeah, I'm home.
Okay, if you could mute yourself, I'm just about wrapped up here. So Form 8995A has to be used if your taxable income is over the threshold, or if you or any of your businesses are patrons of a specific cooperative. And then Form 8995 can be used in all other cases. The forms have to be attached to your return if you're claiming the qualified business income deduction beginning in tax year 2019. Prior to 2019, there was no form for claiming the credit. However, there were worksheets that were included in the 1040 instructions. And then there was also a worksheet included in publication 535 to assist with the calculation. So that is all I have for the qualified business income deduction. You probably have more questions, but I'm here to take any questions that you might have. I see I have 2 comments in the chat. Let me see what they are. Okay, yes, Tanya, this was very confusing. Hopefully I can give you some resources at the end of all of this that'll help kind of provide a bit more explanation for everything. And then Carla, you say you have a consulting business. Does this mean that I don't qualify for the tax deduction? Just off of the basic definition that I read, it would appear that you don't qualify for the tax deduction. I'm not sure if there are any exceptions based on like specific types of consulting, or because consulting is very broad. So I guess, again, I'm not sure if there are any exceptions, but just based off the definition that I read, it would sound like that you wouldn't be eligible. And again, as me and Ms. Gittens discussed, I am going to go and refer back to the regulations to see if they did provide a more detailed list or description of trades or businesses that are excluded. And hopefully that'll help you all out. And I hope to get that information to you all very quickly. Do I have any questions? I don't see any raised hands.
I don't see any raised hands either, and I don't see any additional questions in the chat. But when you send your presentation, when you get an opportunity to do that additional research, whenever you're ready to send it to me, I will definitely send it out to anybody who I have checked in. DL Meredith CCR. I don't know what you're registered under. If you want to identify yourself so that I can add you to my attendance list so that I can send you that material.
Okay, so as promised, I do like to try to include the resources that I discussed. I'd like to try to include hyperlinks for those at the end of the slides. So this first resource page I have here is for the work opportunity tax credit. The first hyperlink is going to be for the frequently asked questions. And then the remaining 3 are just hyperlinks to the forms. So the first one is the Form 8850, which is the pre-screening and notification request. And then the last 2 forms are Form 5884. The first one is with instructions, and then 5884C if you are claiming the credit for a qualified veteran or qualified veterans. Okay, so my second resource page here is for the small business healthcare tax credit. So the first hyperlink is going to take you to the IRS page for this particular credit, and there should be some question and answers there. The second hyperlink is for a credit estimator. I'm sorry, the first hyperlink is just an overview of the credit. The third hyperlink is actually for question and answer. The fourth one is Form 8941. This is the actual form that you use to claim the credit. And then lastly, the last hyperlink is for the shop marketplace, because if you recall, if you are to be eligible to claim the credit, you have to offer your employees health insurance through the shop marketplace. So in short, so the shop marketplace is where you'll find insurance providers that provide insurance packages for small employers. And the packages are usually, the plans are usually, you know, some of the basic insurance needs that your employees would need. So again, to qualify for that particular credit, you have to offer insurance through one of the insurance companies that can be found in the shop marketplace. And then of course, this last page here is for the qualified business income deduction. I've included the Form 8995A, and then I've also included the hyperlink for the Simplified computation form. And then I also included a hyperlink for the income deduction. So it had slipped my mind earlier, but this credit, this deduction was introduced with the Tax Cuts and Jobs Act under President Trump. I don't know why I couldn't remember that at the moment. But I do see I have a couple comments in the chat. Okay, just making sure. Tanya, just to answer your question, so these hyperlinks, you'll actually get a copy of the presentation. So you'll
yes, I'm going to send out the presentation. I just sent a note in the chat to everybody. There was a request for you to put these links in the chat, but I'm going to send this out to anybody who I was able to identify on this call. I think I have everybody except for DL Meredith CCR. I don't have what you're registered as. You can send me an email to confirm you were on this class, and I will send that to you. So whenever Anika sends that to me, if it's today, it'll go out today. If it's tomorrow, it'll go out tomorrow.
All right, and then again, just this final slide is my name and my email address. If you have any questions after we've departed, feel free to reach out to me. I'll be happy to help.